Welcome to Momentum Monday. Howard, how's life in New York?
You can see my portfolio just dwindling into the background.
Can you speak more louder?
Can you hear me, Ivan?
Yes.
All right. What's up, buddy? I'm in New York at the office. Look at Columbus Day. Markets are crashing and nobody's here at StockTwits. What's going on with the world?
Everyone's at lunch.
All right. Welcome, everybody. Ivan, I have to say, good call the last couple of weeks. Even though it's a Momentum Monday, you've been conservative. I asked you both times what you would be doing. You were not looking at new positions, so well done.
Yeah, I even was short the past few days. So.
Oh, good for you. And for your subscribers as well?
Yeah.
Justin, who's in a board meeting or in a meeting right now, he today was shorting a bunch of stuff. He's a pretty good trader. He doesn't trade very often, but he was shorting, using some options, covering some, but also putting on some short trades. Hang on one sec. So what do we got? We're October.
October 8th, yes.
How's the weather in San Diego? Good?
It's nice.
And it's kind of this is going to be an interesting show. I want to get right to the markets, Ivan, but I am taking it as a momentum person and a trend follower. These are the type of markets I dread. We've had these huge multi-100% rallies, and enterprise stocks we'll get to that are in quick 20% pullbacks. We'll lead with Twilio. So let's lead with one of my favorite companies that now is filling a gap, earnings gap. And this is Twilio, everybody. This is a company that we've owned since the high 30s, low 40s. We definitely took some profits on the way up, so I'm proud of that. I definitely think in a bull market, this company is a platform that will continue to grow. But here we are. I don't like trading. I'm not getting stopped out here at all. There still could be 30% downside without me getting stopped out of my last position. And this is part of trend follow. So everybody's got to have their own style, but we can see that I have no idea where Twilio has support on a longer term chart. These are expensive stocks.
It's important to hold 70, I think, here.
The stock could go to 45 in an hour. I mean, that's how good these markets have been and how fast. I don't think people have seen, a lot of these young traders have not seen a fast market where bids disappear and these things go into the whole $10, $15 or 30% in 2-3 hours. We haven't seen that in years, but you've got to have your list. You've got to have your in a market like this where bids are disappearing, you have to have a list of companies that your go-to companies that you want to own at much lower prices. Not so much my 8 to 80 list, but like leading stocks that are just getting killed, but nothing's changed fundamentally. So I think on an enterprise stock level, if we did a tour right now from Salesforce on down, things are down 10, 15%. Zendesk is crazy above 72. It's really just pulling back to May prices. Again, we've been taking a lot of profits the last year. Here's Salesforce, the leader, down about 10% from its highs. But again, I'm not excited about owning these until they get to their 200-day moving averages, which are still 10, 15% away. HubSpot, which is kind of a leader around marketing automation. These things have had incredible runs. Okta, probably my favorite that I've been talking about here. Love to see this in the high 40s with speed to re-enter this stock. But again, this is a period where you and Ivan, you'll go and tell me how you do this because you actually go from both sides of you swing short and long as a swing trader. But for me, I'm just in no man's land. I'm not pulling the trigger on anything because the valuations are crazy and we're filling gaps. But I mean, this stock could easily be in the high 40s in 2 days, and you have to have dry powder to own great stocks when they're down 30%, momentum stocks. So I'm doing nothing. Ivan, how do you see the market here?
I've been covering my shorts on Friday.
So let's go through the index and some of the indexes that you're basing your ideas off of. Just the S&P barely down. It's
we talked in the past few weeks how Russell 2000, which represents the small caps.
This is the small caps, right?
has been leading on the way down, has been showing relative weakness compared to the big cap S&P 500 and Nasdaq 100.
But still only down 7-8% from its all-time highs. People are like in panic mode.
Exactly. It's a normal pullback, but other than the indices, I'm also paying very close attention to the price action in momentum stocks, because momentum stocks are leading indicators. Like they lead on the way up, they lead on the way down. In the past few weeks, we saw quite a few breakdowns in momentum stocks, which were a big yellow flag for me. And that's why that price action made me more cautious. So yeah. we need to see momentum stocks setting up and breaking out before the indices for me to get interested on the long side.
Yeah. So Ivan was I would say the way you were a little more offensive getting out and even going on the short side. I am now just getting into defensive mode, meaning I was selling on the way up. I'm not buying anything right now. And I'm building a list. So the two ways we do it, Ivan's swinging, so he can go long and short and to cash much quicker than me. I've been riding long-term trends, and I'm just starting, get stopped out of certain things and to reposition for the next, and it could be tomorrow where stocks start firming up and breaking out, or it could be 6 months. But I'm trying to reposition now to catch the next set of trends. And it may be a continuation of the exact same things that have happened, but you've got to create dry powder and enter at good prices. And then I'm looking at my 8 to 80 list going, okay, if it's Visa or Apple, where would I buy more? And we're not even close to where I need to buy more. So again, there's not much for me to do, except look for where there could be new strength. Amazon's pulling back, but I mean, the stock could be $1,500 in a sell-off. And I want to make sure that I would have, those are the points that I would add. Google never really got going, but it's also not cratering. It's just kind of in no man's land.
Yeah, in a range.
It's in a range. It never really participated that much in the upside, but it isn't falling as heavily as some of the other momentum names.
From a short-term perspective, I think it's important for Russell 2000 to hold 160. Like 160 is a really important level. It coincides with...
What's your gut? If you had to make a bet, what do you think it holds here?
I think we might see a short-term rally, like starting tomorrow, maybe for a few days, but you never know. Like I wouldn't bet on it right now. I need to see some confirmation. But I think if we lose 160, things can get a lot nastier.
So the index is only down 7%, but if we look at some of the leaders like iRobot or AVAV, they're pulling back. Some of these small cap leaders, they're down over almost 20%, and they were just breaking out. AVAV is another one that a drone company that we loved, just kept going higher, but quickly pulled back 15%. If that was in the low 80s, that kind of would be interesting to me. But for me, it's in no man's land, right? Like if you own the trend, great, but we're not in any position where you got to get excited about entering some of these momentum stocks.
The next earnings season starts next week.
Okay.
And financials are first to report. So for me, it's really important to see how the market reacts to earnings. Like it's a lot more important than the actual numbers, because that shows the actual current market.
JP Morgan's flat on the year. A lot of noise, but flat on the year, which all in all is probably good compared to other stocks. If we look at Interactive Brokers, which is more software meets banking, I mean, it's been hammered. So to me, I'm looking at Interactive Broker going, oh my God, in the low 40s, like this is one where I put away again, right? Like this is not an 8 to 80, but it's also not a full-on financial company. So, if I see this give up 2-3 years of gains and there's nothing fundamentally different other than just mood of the market and, business cycle stuff, I want to own great brands down 40, 50%.
And we have the SME group.
So why do you think it's held up? So this is one that's truly held up. I got this wrong because I own NASDAQ, but let's take a look at CM. Why? I mean, this is really held up well.
People apparently are starting to trade more futures. I mean, if we entering in a new market where correlation are decreasing and macro investors are looking for different themes in commodities, in currencies, probably will see more interest into their products.
Yeah, so CME Group looking fantastic. So that's probably the large cap financial that's doing the best, but it's more of a brokerage trading company. NASDAQ, I mean, maybe just because it's moving with the NASDAQ, just got that completely wrong here. I'm probably going to be stopped out for a nice loss. You know, false breakout from quick breakouts come, you know, nasty, you know, decline. So again, if we're just beginning a market decline, there's a lot of carnage. People will be trapped, and you have to really stay true to taking 10, 15% losses on positions that can quickly become 40%. So you really have to understand, and I don't know yet, like, you know, you take some losses and you kind of reduce your exposure and you get comfortable because you want to have money put to work. But you also don't want to be fluffed out of a high momentum, you know, normal correction, which is all this is so far. Ivan, would you agree?
Yeah, so far it looks like just another garden variety pullback. All the statisticians say that the period from October to December in the midterm year is the strongest period in the market ever. But 2018 has been the year where we've seen many of those old market sayings going bust. I mean, that saying, "Sell you may go away."
These are historically good moments to own stocks, but there is a trade war. Interest rates are rising. It's been a phenomenal market for the last, 2 years. We have stocks breaking down. I think the biggest issue is, rates. Rates are going up. Housing stocks are crashing. We have a trade war. You don't want to stand in front of stupidity. And textbook wise, even though rates are low, New York market, I'm reading about it. I'm in New York, but New York markets, even though it's always going to be overvalued, is definitely getting punished. The home builder sector is getting punished. Ivan, if you could pull that up. It was a record 13 days in a row, Charlie said.
Yeah, I mean, this is the ITB or
XHB, maybe?
XHB.
I mean, come on. This is this could get ugly. Now, the point is, this could already be as ugly as it gets. That's a pretty big move for the home builder index already. And so this could be great news for if rates, are going to reverse. But at the same time, we've had 8 rate hikes in a row. We have a trade war. We have, a really divided political, intensified, nasty mood out there on both sides. I just don't think you have to be a hero. I think you've got to stick with trends that are working. And then if things are going to be, you just have to be prepared.
Yeah, I mean, look at China, which is the FX side of China caps.
There's been no bottom.
If they lose 40, this thing is basically entering a bear market, I think.
No, Tencent will drop into the low 30s. I don't think people really understand that. It's okay for me because it's one position of, but you can't be a hero here. These are perilously, hanging by a thread trends. These are not bad companies, but these are not easily valued companies, and they are tremendously under real massive selling pressure. And so small investors can't stand in the way of this. And so you really have to know why you own certain things if you want to ride out a bear market. And it is not fun to ride out bear markets, which is why you've got to raise your cash levels and reposition. But again, there is a lot of strength. If you're hiding out in the right sectors, certain biotech stocks have not been hit yet. Amgen, Ivan, which we talked about on I'm Long, is still holding above its breakout point. Right? Like, I'm not saying it will up $10 tomorrow, but like there's no reason to panic right now. What you should be thinking about is repositioning.
In a real market correction, most stocks will get hit, including Amgen.
Including Apple.
Don't get this illusion by looking at all those stocks that are holding really well right now.
In a bad market, they're just going to get hit. They're not. It's not about have they been hit. It's just a matter of they'll get hit. But at the same time, if the market starts turning and gets strong, I would imagine that Amgen and Apple are going to lead the next round because those are the stocks that have held up the best.
Yeah, you need the stocks that held the best, and also the worst hit stocks are the ones that outperform during market rallies. It's really interesting what's happening right now in emerging markets. Most of them are down significantly, but Brazil has been gapping up left and right like a biotech stock. It just there have been some crazy gaps in Brazil, like 5-6% gaps every day, and I'm not sure why. I think one of the reasons is because one of their presidential candidates, like they call him the Brazilian Trump. It seems like that the likelihood of he winning have declined a lot, and this is one of the big reasons why Brazil markets have been running. But I don't know. I don't know the market that well. It's just a speculation.
In a tougher market, I ain't going speculating anywhere else but the U.S. And right now, the U.S. is the last market to fall. If we pull up an international, do we have all the international markets there?
Okay, let me share a tweet by Charlie.
This is an important tweet from my friend Charlie Bilello, which really goes to show, hopefully people can see it.
Yeah, they should be able to see it, yeah.
We can see, all right, forgetting Nigeria and Greece and Turkey for a minute, but if we look at Russia down 50%, Brazil down 49%, Italy now hitting massive new lows. These are gigantic countries. Argentina, Mexico down 30%, China now down 27%, South Korea down 20%, Hong Kong down 14%, Germany down 16% from all-time highs. We're living in our own little bubble here in the U.S., and a lot of people are taking credit for that, and I don't believe any of them. I mean, U.S. is a place where money goes to hide, and you can see Canada also, Norway. You can see the countries that hold up best when the world's going to shit. Japan. I'm surprised France is only down 9%, but Japan, New Zealand, Norway, Canada makes sense. UK down 10%, but there's still some big moves. So the US, something's going to give here. The US is going to play catch up, or there are some incredible emerging market opportunities. And I'm not good enough to say that, but this one chart tells me that US has got a lot of catching up to do, and it'll probably catch up fast, meaning if we get a move in the markets, in the US markets, it'll be fast. So that's generally the way it happens in the US. And the indexes have been hiding a lot of fucking really ugly action. And so, can you get a drop, over 4, 5, 6 weeks down into the, 2,600 on the S&P? Absolutely. How you would behave under that circumstance tells you what you should be doing today. Personally, I don't think that, but at the same time, there is some air into these indices. What's holding the indices together, Ivan? Is there anything that you see that's just kind of made this mask the weakness in momentum? It's probably energy.
Yeah, crude oil.
Crude oil. So you can see, like, not budging, hitting 4 or 5 year highs, oil. I think that's energy's holding the market. I think healthcare as well, Ivan, like the medical stocks have not been crushed.
They're all starting to pull back. I mean, I've been through enough cycles, short-term cycles, to know that during market, like, I'm not looking at relative strength at the beginning of stages of a potential market correction, because I know that the stocks even that are holding well at those beginning stages, they're going to get hit as well. So I'm just trying to pay attention to market breadth, to see if it hits extreme readings to the downside, trying to see if momentum stocks are stabilizing and starting to rise higher.
Yeah. I'm not looking at new ideas. I don't even want to, do we want to let's go to SL15 to see what, obviously it's going to be a sea of red. So now we're going to go to our list.
It's normal to see momentum stocks getting hit hard during corrections. And as I mentioned in my review in the past couple weeks, momentum stocks can make you a lot of money on the downside as well. Like, they're not one trick pony that can only make you money on the upside.
If you subscribe to Ivan's Service Market Wisdom, I think you've probably been in cash for 2-3 weeks, or mostly cash, have you not?
Yeah, mostly cash, but we've also caught some short.
So I think the reason that Ivan and I do this show is for markets like this. I can't myself position myself with what I do during the day, investing in startups and managing that. I can swing my portfolio from one side to the other. I think Ivan's very comfortable as a swing trader doing that within our momentum list, meaning, having some kind of balance and teamwork around how to think about markets really kind of helps here. And so I've been watching. You've been doing a really good job of legging out of this and getting a few short ideas on. I, on the other hand, just have to take some of my lumps and take some losses here. But that's it. But I've been able to ride some of these things for a while. But I think if we look at Twitter, for example, as an example, what can go wrong if you just aren't careful, right? We rode this, we loved it. We took some profits in the 30s and 40s. It crashed. I dabbled, in the low 30s in it, and then we're out. I mean, this is a good case. Like, I think Twitter could see the low 20s. So I'm saying once trends end, you just can't hang around. You need to continue to, I at least continue to put my capital either in cash or into fresh ideas. And so this can happen to any great stock. And you always have to understand that stocks are much different than the companies, and the way institutional money flows out of stocks can really be tricky at the end of trends. And so you've got to be on alert when you're doing momentum investing. Yeah. Anything here to add, Ivan, at the end of the week?
Keep in mind that market corrections are the best thing that can happen to a long-term investor, because they'll let you get into your favorite strong companies like Nike, Disney, or Google on really good prices. So I'm sure that every time the market has a 10, 20% or even 30% correction, Warren Buffett is dancing out of joy. So depending
I hate losing money. I'm not dancing. I'm very comfortable that I've taken enough off the table on the way up. I'm not comfortable with these losses. I wish I had listened to you and put on some shorts. I'm uncomfortable on the road doing that. Everybody's got to live with and fight their weight class and fight with their psychological profile. But if you are a momentum investor, there is nothing to be excited about here. We are going to need some firming up of the markets and some I think some fresh leadership. And if that leadership is going to come from high interest productive stocks, I am really unhappy. I mean, and so you just have to be patient right now. If we're rotating out into energy and new industries that aren't, to me, sexy, dynamic software growing industries, I'm not excited. So this is another one that I guess, if you food and grains seem to be working. So you're saying Archers, Daniels, Midland.
It seems like the market is starting to think that inflation might be an issue 6 to 12 months down the road.
Okay, Ivan, let's go. Thanks, Market Smith, for the charts. Have a great holiday, Ivan, here on Columbus Day.
Thank you, Howard.
Okay, bye.